Hello and welcome everybody to today's Commodities Corner presented by the Gold and Silver Club. So during today's session, we will be covering live market analysis. We will go through a watch list of trading opportunities, a forecast of where we expect gold, silver, and also oil to be heading next. As always, any questions, any comments, any contributions, please feel free to put those into the comment section within the WebEx platform, and we will go through those during the course of today's session. Okay, good. So let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For more information on the Gold and Silver Club and our expertise, please do visit our website, which is www.thegoldensilverclub.com. Okay, good. So before we get started, before we go over to the charts, I've just taken a snapshot here of the one-day relative performance today because I think it's interesting to see where the actual momentum is in a lot of markets. It's been interesting to see the bounce that we've had higher today, in particular in oil. So overall, oil today has had a fairly significant bounce on light sweet crude oil, better known as WTI crude oil or US oil, and also UK oil as well. They both reached some critical levels yesterday, getting a bit of a bounce at the moment, up around 1.4% on both of those right now. We'll take a look at oil very shortly. We're certainly starting to see a bit of momentum to the upside. We've seen over the course of this week certainly a decline on gold and silver following on from the FOMC statement, which we'll have a look at very shortly as well. So gold, silver certainly been big movers, and the US dollar actually over the course of this week has also been a big mover. So just to give you an idea of our portfolio performance, trading performance update, using our exclusive research-driven strategies, this is the way that we've traded the market over the last week. These are the main positions that we have profited from, especially from the back of the FOMC statement and also the momentum on oil. So we capitalized here on a sell on both gold and also silver after the actual FOMC statement was delivered, and we saw initial breakout to the upside for gold, but then very quickly developed into a bull trap. We had a sell-off, and we've subsequently started to see a continuation pattern to the downside. A V-shaped reversal pattern is in development, and we went for a sell short for the price to be lower than $1,259 per ounce, which has been profitable within a 24-hour period. We've also added additional positions now, looking for more weakness in both gold and silver. We've also capitalized on a sell on silver, again in and out very quickly on the trade, initially 24-hour trade for the price to go lower, breaking below 16.95, looking for the price to close lower than that point. And also we've now added additional trades now for this selling momentum to pick up to the upside. Looks like certainly we've got a double top now, which is in formation at the moment. So we'll have a look at that shortly on gold and silver. We've also continued to capitalize here on the OPEC move, where we discussed that we'd had a number of trades which we staggered, so shorter term trades, longer term trades. The last of those trades has now expired, which expired earlier on in the week from our initial entry at 51.55. We continue to see momentum to the downside for oil, although I would question as to whether we might be at a point where we would start to base now for oil, because we've hit some critical levels of support, which I'll talk you through when we go over the chart. So just to break it down for you in terms of the major news items that we have now coming up as we go into July, and of course June, major news item that we had waiting for last week was the FOMC statement on Wednesday. It did provide a lot of volatility. We've talked about this before. It's really set the tone for the markets over Thursday, Friday. We've seen a lot of big moves, commodity currencies, gold, silver, oil. Everything has moved off the back of that FOMC statement. So it's certainly had a big impact on the market. So just bear that in mind, that overall we have had, again, another big move in the markets off the back of the FOMC statement. I'll break it down for you in more detail when we look at the US dollar index and we look at gold and silver as well. In terms of major news items we've got coming up next, well, the start of the Brexit negotiations do commence next week from Monday onwards, so we'll see some likely volatility off the back of that. As we go into July, we have Fed Chair Yellen doing her semi-annual testimony, which definitely creates a lot of volatility. As we go into August, we've also got now the German elections coming up as well, and now the Federal Reserve have indicated they're going to be in a position to increase interest rates in September, so the FOMC meeting in September will be very closely watched as well. That is also a very high impact news item. In the short term, in terms of what we do have coming up today, this afternoon, we have now the Michigan consumer expectations, which is coming up within just the next hour or so at 3 o'clock London time. We have FOMC member Kaplan speaking, and we'll be watching to see whether they're hawkish again, as the FOMC statement was on Wednesday. Janet Yellen was as well, so see if they still hold their aggressive stance on increases in interest rates this year. And then we've also got the Baker Hughes oil rig count coming up at 6 o'clock London time, which we anticipate to have certainly some impact on oil prices as well later on today. So as it relates to execution of trades, looking at these on binary.com, we'll be talking you through two types of trade again here. So very simply, that is the higher or lower type of trade. Now this is perfect for this sort of volatility, FOMC statements or UK elections, non-farm payrolls. Volatility is our friend when we trade, but we also need to make sure that we're not overexposing ourselves in terms of risk, which is why binary.com is perfect, because all you need to do is you need to just predict the direction of the market. You don't need a stop loss, you don't need to take profit, and you need to just get the time frame right, whether you're looking to be in and out of the trade within a half an hour, 1 hour, 4 hours, 1 day, 2 days, 5 days, 7 days, whatever timeline you're looking at. You want to just be getting on the right side of the overall trend or whatever way the market is breaking out, and also just time your exit as well. So essentially 3 components to have a successful trade on binary: wait for the right entry, get your duration right, and then get, of course, the overall direction right as well. It's very transparent in the sense that you can see what your payout is, so you can see what your deposit is, you can see what your payout is in each market, purchase price for price to be higher or lower. You know what your risk is up front, so there's no risk of risking more than you should be on a particular trade, because you know up front what your risk is, what your payout is. So in that way, it is very useful to be able to have this tool to take advantage of the volatility in the markets, and especially at the moment where some markets might require you to have very large stop losses. Not needing a large stop loss is beneficial, certainly, to take advantage of shorter term breakout moves in the markets. So with that, we'll move over and we'll have a look, guys. We'll go over some technical analysis. We'll talk you through the charts. As always, we'll keep it very interactive. If anybody wants to do a quick test at the moment that you can speak into the chat, feel free to do so. I'll move over to the markets very shortly. But if anybody does want to do a little test, it's in your chat function within WebEx there. If you have got any questions or comments, if you want to test that out now, feel free to do so. Otherwise, actually feel free to do so whilst I just bring up the charts. I can take just a few seconds or so, okay? Okay, good. So just a quick check-in. Again, guys, you can all see my screen okay, and you can hear me okay as well. Yeah, fantastic. Okay, great stuff. Thank you, Sharice. Right. What we will have a look at first is I want to, first of all, just draw your attention to oil. And the reason we're having a look at oil is because we've got quite oversold. Now, overall, oil has certainly been in a downward trend now, following on from the OPEC meeting at the end of November, where we saw oil spike up to $52 per barrel. Since then, we've seen oil do nothing but decline, and it's continued to form these bear flag patterns, which are visible here, certainly just on a bar chart. We can look at this on either a candlestick chart or a bar chart, but a bar chart is quite good to see what the overall momentum of this market has been. So you've got trend channels here, essentially on oil at the moment, which are very clear, which is where we're getting supported. And you can just draw in your bear flag formations on oil, and you will see each time the bear flag, each time we're getting a retracement, we are seeing essentially those retracements break down. So we're seeing these bear flag setups, and it's been nothing but bear flags really from the back of the OPEC meeting, where we've seen just continuations of these bear flag patterns where they've continued to breaks down to the next level, and you can see that. So overall, we've had 1, 2, 3, we've had, well, 3 bear flag patterns, which have all led to significant breakdown in price once the price gets to the lower end of that zone. However, we're now at a point now on oil where we're getting very oversold. We're getting at a point where we could get a bounce back in price. We hit the monthly pivot. We hit quite an important level of support on a closing basis. You could argue here that oil, really all it's done since about for the last year or so, since approximately, let's go back in the chart, since to around August of last year, we've just moved sideways. We've moved from, this is US oil, we've moved from $45 per barrel, or just below that, in fact, slightly lower, about $43 per barrel, back up to $54 per barrel. All we've really done there is move, consolidate in this sideways pattern. And at the moment, short term anyway, oil is a little bit oversold, and I would suggest it's overdue a bounce from this level. Watching this on lower time frames yesterday, and I'll break that down for you. We'll have a look at that on the lower time frames as well. You can see where we were consolidating at the major level of support here. We eventually, into the close, bounced off the monthly pivot. Since then, oil has got a bit of a bounce, a bid this morning. It is retracing. We're seeing short covering at the moment. We've seen oil break down to essentially 6-month lows, and at the moment, we're starting to get a bounce. I would suggest short-term momentum could see oil break out higher here. We could get a retracement back up towards $46 per barrel, which from the point where we're at now would be roughly about a $1 move higher here. So this is very typical to get these basing formations, see oil retrace, break out higher, get into resistance, and then get sold into. Although on a daily time frame, we are getting to a point now where it could start to form a base around this level. This was a point where oil capitulated from previously. If you're a longer term trader and you'd be looking to try and find an area of value for oil, this would be around the level between $43 to $45 per barrel. So essentially every time oil, and I'll just put that out back into the daily, every time oil gets down to approximately $45 per barrel to 43, it is oversold. Okay, OPEC, they want the price of oil above $50 per barrel, even higher than that actually, but $50 per barrel is the sweet spot for oil at the moment. That is the price where they can, where a lot of the OPEC members can make money. But below $50 per barrel, not all of them can. Some nations can. Russia, for example, can make money when the price is below $50 per barrel. Other OPEC members will suffer when the price is at the current levels. So typically, we see it as a good area of value where traders would start to look to buy oil between $43 to $45 per barrel around this zone. It still has the potential for another breakdown lower in the weeks to come. We might see it roll over back towards 43 before we get major support, but I would suggest at this point here could represent a buy. Certainly short-term momentum, you can see at the moment it's already starting to break above yesterday's high. I'm looking for a retracement higher, then we might have another opportunity to sell into it, just depending on what the overall fundamentals are saying at that point. But I see today the breakout that we're having at the moment, essentially we're going for a buy at this point. We're looking for the price to go higher. You can see I've just got a little trend channel forming at the moment on oil, looking for a pop higher. An ideal situation today or within the early part of next week is a $1 retracement higher, initially up to $46 per barrel. That's what I'm looking at the moment for oil. So I'm looking for a retrace higher. That is US oil. UK oil is leading at the moment. So we've already seen a breakout this morning on UK oil. Again, I just dropped that down into lower time frames. So you can see UK oil has been breaking out since this morning. Actually, it came down as well. But actually, sorry, that's UK oil. Let me put UK oil on it. Excuse me. UK oil, that was US oil. This is UK oil. So this is Brent crude oil, was managing to find support throughout most of yesterday, just around $47 per barrel. If you're watching the chart yesterday, it's very unusual to see oil stay this range bound, getting bid back up. Every test of 47 around that zone was getting bid back up. So support resistance, support resistance. There was no follow through move over it broke, after it broke, excuse me, just below the 47 zone. No follow through. Then slowly but surely overnight, it's managed to drift higher. It's popped above resistance, but getting some short covering at the moment. And I would look for this momentum to continue with both light sweet crude oil and also Brent crude oil over the US session today for a retracement higher. So short-term momentum, I'm looking for oil to retrace higher. Bigger picture at the moment is questionable as to whether we've formed a base here. Is this the bottom? Has that been put in for oil? Or is this just going to be a short-term rally higher, which could fizzle out in the early part of next week? We'll continue to watch that. We've also got the Baker Hughes oil report, which is coming out later on today at 6 o'clock London time, which could give more volatility. At the beginning of this week, oil did have an attempted breakout to the upside. We saw that here, where we saw several tests of the major overhead resistance around $47 per barrel for US oil, just below that. Then we had the API numbers come out on Tuesday evening, which showed an oversupply of oil. And then on Wednesday, we also saw the crude oil inventories, which came out as bearish, and they caused this big move lower here on Wednesday. We saw oversupply for gasoline inventories in particular, which caused a breakdown lower, but now we're getting a retracement. I would look at the potential for a short-term move here. Again, binary, you don't really need a big stop loss to take advantage of these short-term moves. So just the price to be higher over shorter time frames could take advantage of that momentum to the upside by UK oil and US oil. So overall, I'm looking for a retracement higher. I'm looking for a move back towards the upper end of this trend channel at the moment. So I'd look for a move back towards resistance on UK oil and US oil, and then probably in and out by that point, by the point it gets up to this trend channel, and then look for the potential to either sell into rallies here if we get additional weakness, if it rolls over, or if it can follow through, continue to break out, look for a buy opportunity again at the early part of next week. Okay, good. So that's what we're looking at the moment on UK oil and US oil. Now moving over to gold. So gold has certainly been in the limelight this week. We've seen a lot of volatility off the back of the FOMC statement. The FOMC statement turned out to be a bull trap for gold in the sense it broke above 1,280 US dollars per ounce. The knee-jerk reaction was a breakout to the upside. That got sold into, formed a bull trap. So this bearish engulfing candle, which has been formed, a rejection candle, is a bull trap. So what you look at after that is a break of the previous day's low, break through some support. You look for continuation. We've also got a V-shaped reversal pattern in development at the moment. So gold, has been breaking down since the FOMC statement. Essentially, the FOMC statement and the Federal Reserve were more hawkish than expected, even though US data more recently has been very weak. So we haven't really seen strong non-farm payroll numbers, retail sales, which came out earlier on in the week, and CPI numbers. They've all been quite weak. So everybody was expecting the potential for gold to break out and rally. But what the Federal Reserve did is they came out with a more aggressive stance, that or even with weak data, they were in a position to go more aggressively with interest rate hikes. And overall, that created strength in the US dollar, weakness for gold and silver. After an initial breakout on gold and silver, both of them turned around, started to sell off. And then yesterday, we see momentum continue to the downside. I would suggest that this momentum could increase to the downside here short term. So we don't really have a signal here for a buy at the moment, and we have a signal for a sell. So we are looking to take advantage of more momentum here. If I bring it down onto lower time frames, we can just go really pretty tight at the moment, and you can just see overall what the price structure is. So you can see it's actually breaking down again at the moment. So it hasn't really managed to follow through much. In fact, it's coming back towards 1,254 US dollars per ounce at the moment. Had a bit of a pop earlier on today, but overall it's looking quite bearish here, and I'm still looking for lower prices as we go into next week. It is getting a bit of a bid from 1,250 US dollars. There is some support at that zone, but it could just be profit taking. So we might just see a bit of a pause around this level and then follow through to the downside. Gold price in Australian US dollars and gold priced in euros at the moment is looking quite weak. And if you look at gold priced in other currencies, it's important to see what's going on. The US dollar has also broken out over the last couple of days off the back of the FOMC statement. That will likely put more pressure on gold and silver as well. So overall, I'm looking for more downside. I would look for 1250 on gold to get breached in order to really see momentum pick up to the downside. If we see gold breach 1,250 US dollars, that is where we then likely move to 1245 initially, and then we could see a move back down to the 1230s ultimately if we can see this continuation pattern pick up to the downside. You see, what a lot of traders will be looking at now on gold is it looks like we've now got a confirmed double top on gold at just below the 1300s. Right now, there's not any real catalyst to drive the price of gold higher at this stage, and we don't have any major data points that we're waiting for today or next week either. In the past, over the last couple of weeks or so, we've had a number of potential news items which could have really sparked a significant rally on gold and see it follow through. One of those was, James, so going back to last Thursday, Super Thursday as it was known, when gold was trading very near to 1,300 US dollars per ounce, a number of news items we were seeing around that time could have been catalysts to see gold break significantly higher. One of those was James Comey, former director of the FBI, testifying against Donald Trump. We didn't see any additional volatility. We saw initial breakout to the upside, which was very short-lived, no momentum overnight. The European Central Bank statement as well, Mario Draghi's speech caused a little bit of volatility for gold, but overall it was bearish for gold short term. And then the UK elections, which could have caused volatility, seen US dollar, well, essentially it could have seen a safe haven bid for gold. We didn't see any follow through on that last Thursday as well. And this was where gold was looking after all of this volatility last week, formed an inside candle on the close on Wednesday, and then Thursday we got this follow through move to the downside. Then Friday we started to see this move lower, 3 black crows formation, and overall this week we just continued this pullback in price. So it looks like gold is now starting to pick a more firm direction to the downside. I take you over to the weekly chart. It becomes much more evident that gold is likely to potentially break down for another week until it comes into major support. Major support at the moment for gold sits between 1230 to 1240, and you've got an inverse hammer on the weekly chart from last week. It could still remain in its overall upward trend and retest 1,230 or 1,240 US dollars. I would suggest at the moment it looks more inclined for more downside. There's no major news items like FOMC statements, non-farm payrolls, or any major data points next week, which not any scheduled anyway, which are likely really to get gold provided with that safe haven bid. We don't have any ECB conferences next week. So overall, next week is relatively muted in terms of major news items, which could affect gold in a significant way to get a safe haven bid. So I think at the moment, or I believe at the moment, that we could be in for a little bit more downside unless buyers come in a strong way between now and the close at 1250. They drive the price higher. It would really need to close back above 1260 in order to see more upside, in my opinion, for gold at the moment. If by some for some reason it managed to get a break and close back above support here, back above the 50-day moving average, back above, 1260 is essentially the line in the sand here. I mentioned it last week as well, that whilst gold was above 1260, that was a very important level. So if gold managed to stay above 1260, the upward trend has more room to go, and we could see another retest and breakout of 1300s. Now we've broken below 1260. Overall, I'm looking for more downside. Any rallies still, in my opinion, to be sold into at the moment. With that in mind, let's just bring you over to silver as well. So silver too, very similar situation. We're selling into silver at the moment. We're taking advantage of some short-term trades, but also got a few swing positions on as well. Silver 4 hour is breaking down. If we have a look at silver daily, is breaking down as well. We've got this rejection candle on the daily chart after an attempted breakout to the upside, and we've got all of that overhead resistance in the way for silver right now. It broke out of a major trend channel last week, although it retraced back up towards that level off the back of the initial FOMC statement spike, but then it's rotated lower and it's hovering again just near yesterday's lows. I'm looking again for more downside, targeting 1640, even potentially down to this low here around the 16 level for silver if it continues this momentum to the downside. On the weekly chart, again, you can see it's got more space to break down. It has broken through a key level, Fibonacci level as well. We could get a retest back towards the 1640 zone. The weekly found resistance around the 200-day moving average. Inverse hammer developed on the weekly chart last week. We've seen a continuation pattern to the downside as well, and you can see that overhead resistance as well, which is following that channel at the moment. So ultimately, I'm looking for a bit more downside here on silver, a bit more downside on gold, and then probably a good buying opportunity as we transition towards July now, July, August, once we've got into an oversold condition, which at the moment we're not quite there. We're getting a little bit short-term oversold, but it's got more downside to go, in my opinion, on both gold and silver before they will get to an extreme oversold condition. So at the moment, short-term, I'm looking for a bit more momentum to the downside, which could follow through until next week. We'll reassess how it's moving into the following week. I'm looking at short-term retracement here on oil to the upside, so both on WTI crude oil and Brent crude oil as well. Looking for a bit of a bounce higher here at the moment. Okay, also just in terms of additional webinars that we are holding, we're going to be holding another special webinar which is just focused on the commodity currencies. So that will be another one to log into. You can check on the binary.com website, which will give you details on that, a special webinar dedicated to trading commodity currencies, which include Australian dollar, US dollar, Canadian dollar, New Zealand dollar, US dollar. So not just trading directly the commodities, you can also take advantage of the correlations here with the commodity currencies as well. So do make sure you join us for that as well. Just hop along to the webinar section on binary.com and you can join us for those special sessions too. Okay, so with that, I hope that gives you a little bit of insight, guys, into what we're looking at for gold, silver, and also with oil at the moment, how we're positioning ourselves right now. Overall, I see short-term momentum to the downside for gold and oil, and I see short-term momentum to the upside, short-term momentum to the downside for gold and oil, and short-term momentum to the upside for oil. So that's the overall play that we're taking advantage of at the moment. If you would like to join us during the week as well, a lot of attendees on binary.com also like to join us at the Gold and Silver Club, so you're kept in the loop, not just once a week, but every single day of the week with our trade alerts, getting information on every single trade that we are in, our exact entry, our positioning day to day, and also access to our private members academy, access to our live trading rooms during the week, and you also get access as well to all of our private live trading rooms for very special news events too. Okay, so yes, to get access to, essentially, let me show you exactly what you get access to at the Gold and Silver Club. To get access to our live trading room webinars during the week, we also do special live trading rooms prior to major news items, non-farm payrolls, UK elections, US elections, FOMC statements, which can be very lucrative and really give you the heads up of how you want to position yourself going into that, during and after as well. We provide you with notifications of every single trade that we are getting into, including exact entry, exit, timing of those trades as well, and of course commodity research, which is very important. So research plays a very big part in the trades that we take at the Gold and Silver Club, so you can get really on the right side of position. So again, you get exclusive access to our live trading rooms, trade setups ready to implement. You get notifications by email and SMS, details of where to enter, exit, trade management. You get our weekly trading plan with a watch list of trade ideas for the week ahead. We provide you with live support, of course, and institutional level trading research and commodity insights to give you an edge for your trading. Okay, fantastic. So again, to make an application, guys, all you need to do is go to www.jointhegoldandssilverclub.com. If you like today's session, you like this on a daily basis, you want access to all of the resources at the Gold and Silver Club, just make sure you make an application to join us. And I very much look forward to working with those of you who will be making an application to join us at the Gold and Silver Club. Okay, fantastic. And just confirmation, thank you for that, Sharice. The commodity currency session is going to be on Wednesday, the 5th of July, and then on the 27th of June, we have the right way to trade gold and silver. There's a link there in the chat as well, so you can join us for all of those webinars too. Okay, fantastic. So with that, guys, good trading. Have a fantastic weekend. Very much look forward to hear from those of you who will be joining us at the Gold and Silver Club. We'll catch you on the next one too. Okay, thanks everybody. Thanks, Sharice. Take care, everyone, and we'll speak to you real soon. All the best, guys. Take care. Bye-bye.